Hey traders, Raghee here, and in this recap video we're going to cover the crude oil market now that we've seen the EIA numbers. I'm going to talk about how to navigate through high impact data and what we're doing with the current position. So the navigating part is the easiest and yet probably the most overlooked for probably two reasons. Because one, traders don't necessarily know where to find this data, and then also traders don't necessarily know what to do with the data. So if you take a look at what crude oil does hour to hour and day to day, you want to write these numbers down. On a day where we get crude oil inventories, in this case the EIA numbers, you want to factor in at least a 60 plus or minus 60, really 50 to 60 point range in terms of the volatility that you're likely to see. Now that's not everything, that's really moving today forward. What about going backwards? Well, remember, EIA numbers are always preceded by the private inventory data, the API. And the API number, you'll see that reaction around 4:30 Eastern Tuesday. And in this case, the market sold off. Let me show you the 5-minute chart. So you want to know what the reaction was from the API data. And what was really interesting is the API data sold the market off, and then the market spent the rest of the after hours, if you will, the post API back to the US session, kind of coming full circle. So before the EIA, we were basically hovering in the same place that we were pre and just post the API volatility. So the market said, yeah, we don't want to deal with EIA from 50. We want to take it back to where it was before the data release, the API data release. And that allowed us to start to factor in what a plus or minus 50 to 60 cents would look like from about 50.50. Well, 50 to 60 cents is going to put me at about 50 to 49.90. So I'm calibrated, I'm ready for the market to test the lows that we saw down in this area. Right? I'm ready for this. Not that we're going to get it, but the wheels psychologically are not going to fall off the wagon. My trading plan is not going to be discarded, thrown out the window if we hit this area because I've calibrated for it. I expect that if there is a lot of weakness, we could get down there. I also know that we could shoot straight up by about 50 to 60 cents. Now, we didn't shoot up that much, actually, but I'm ready for the movement in either direction. More so, you want to be calibrated for the movement against you. So where could crude oil go now? And this is, again, another very easy yet overlooked simple arithmetic. Go to the daily here. There we go. And take a look at the plus or minus today, which is about 165, almost 170. And that simply means that if I'm going to project a potential low from where we were already almost at 50.70, right? So let's just subtract the $1.70 to make the arithmetic super simple. Where could we end up? 49 even. That 49 low could be where we end up. Because if you take the 70 cents plus another buck, you end up at 49. The current low is 49.91. Again, I'm calibrated to this market basically testing 49 to 48.80. That was the range extreme low I had calculated before EIA. And we punched up to a higher high, so that's why the range extreme low is up about 20 cents. So we didn't test any of that. The overall trend is still very much intact. The 50.50 buy is still, actually 50.05 buy is still very much intact. Where did that 50.05 buy come from? Good old-fashioned wave, grab, and some Darvas 2.0. So am I going to continue to look bullishly on crude? Look, I don't trust this market very much. I really don't. But to utilize levels like what we have right now, and just trade what I see, knowing that OPEC is doing a pretty good job managing the current narrative about the glut in crude, let's just see where this market takes us. I'll keep a tight leash. I don't have to give this market a whole lot of latitude, but am I going to risk about a point on this trade, maybe a little bit more? I think we're risking about 1 point on this trade, which means that I'm actually risking less than the upper end of the daily price movement range. I'm risking about the average. And that's really as realistic and as minimal as we could expect a trade to be. So I like this trade a lot. We're going to continue to see where it goes. And that's how we navigate any kind of high impact economic event. I'll see you in the next update.